All right, everyone, we have a new video today from CNBC that is the mainstream media in the world of business and finance, and they have not talked about Palantir in a while outside of Jim Cramer saying that it's not a real company yesterday. Roger Montefonte, someone who has owned the stock since 2014 and has not sold since then, believes that Jim Cramer is wrong about that. So I'm going to play this clip. My computer's being a little weird, so for some reason it's not letting me be a small box in the corner. I'll figure out what's going on. It's a 4-minute clip. You can watch it, and then after these 4 minutes, I'll be right back to talk about everything he said and my thoughts on what he had to say. Before we get into that, remember, subscribe to dailypalantir.com. A bunch of you subscribed yesterday. It's free newsletter every single day, dailypalantir.com/subscribe. Leave in the description. Make sure you subscribe before the end of the video. All right, watch this clip, and then I'll be right back.
Joining us right now is Roger Montefonte. He's Fort Capital Group's CEO. Good morning to you.
Morning,
so
Andrew.
Curious what you think of this company. I know you were an early investor. You're not one now, but somebody who understands and has studied the company. We had a conversation with Jim Cramer about this company yesterday. I respect Jim a lot, but we're probably on other sides of this. He thinks this is not a long-term great company. I look at it and think about all the things that they've done, frankly, to help protect the U.S. from terrorism and clearly where it's gone in terms of the corporate space. I'm curious where you land and how you think about both the value of the overall company in terms of what it does, but then as a stock as well.
Sure. Well, thanks for having me. I'll say this. I mean, first, I'd like to at least just run through some of the numbers because, again, I'm with you. I respect Jim. I like him a lot. But I think some of the comments that he made were actually irresponsible when you really look at it. They did 1.9 billion in revenue last year. They guided to over 2.2 billion in revenue this year. They become GAAP profitable last quarter. They're going to be GAAP profitable for the full year of 23. They have free cash flow of over $550 million over the last 8 quarters. And you're looking at $2.6 billion in cash in the bank. So to classify this company as not being real, I think is ludicrous. I mean, they're every bit real, and if you ask the U.S. Army or ask the Ukraine or ask, the folks at the CDC or, different governments from around the world, if Palantir is real, I think they'll unequivocally say that they are real. So, I think it's...
You own shares in this company personally. I know your fund was an early investor in it before. When you think, though, about the value proposition long term, there are real questions about the long-term value, questions around dilution, for example. What do you think of those? What do you think of those issues?
Yeah, well, I think listen, dilution was definitely with stock compensation was definitely a big deal in the early stages when the company came public through direct listing. I think those questions and have dissipated since. I mean, look, this company has always been a very provocative company. And I would venture to say it's always been a misunderstood company over the years. I've been an investor since 2014. I continue to be an investor. And the reason what attracted me initially to Palantir is, their product, their technology, their software. You'd be hard pressed to find another company out there that could deliver the software they could deliver in the format they could deliver to. When they first came public, the big issue was, can they scale it? Is it just, this dark ops company that deals with government? Can they, can they scale this product and can they sell it, commercially? And I think they've answered all those questions. I think what Jim conflated was the investors that got behind Palantir and then the underlying company. You can't chastise the underlying company for the type of investors that get behind it, right?
Roger, we're going to have to run, but we have a chart up. I don't know if you can see it. This stock was trading at $40, if not almost $40, 2 years ago. It's at $8 now. As an investment, what do you realistically think about this company? Call it, if we had this conversation 12, 24 months from today.
Well, my window has always been 5 years from the time they came public. And I think management is always guided with a 5-year plan. I think, they've averaged close to 30% growth year on year since they've come public. They've turned profitable in the time frame they said they were going to. So I think the value proposition long term is tremendous for Palantir. I think it's a software that's critical, that's solving the world's biggest problems. I think it's going to continue to be a software that's at the forefront to solve those problems in both You
But
know,
is that I mean,
Okay, so obviously Roger had some things to say about Jim Cramer and his thoughts about Palantir not being a real company. So a couple things. Why is Jim Cramer saying Palantir is not a real company? Because Cramer is Cramer, and honestly, I'm very happy that Jim Cramer does not like Palantir. Literally everything this man has said, the opposite has happened. And unfortunately, as a SoFi shareholder, he now says he loves SoFi, which is making me reconsider the entire position. But nonetheless, Jim Cramer, not saying Palantir is not a real company. I think it comes from his ideological views on Alex Karp, and sort of like the banging on the table, the cursing. Karp, kind of turned him off when he did that stuff. Andrew Ross Sorkin has actually spent time, one of the hosts of the CNBC, with Alex Karp. And he knows him really intimately, right? He knows what the product does, knows how important it is for U.S. defense and critical decision making, all of those different types of things. So it makes sense why he's a little bit more sympathetic to him. Roger Montefonte made a couple good points. Now, first of all, I would be a little bit more enthusiastic than Roger was. I don't think he did the best job kind of selling the stock necessarily. And it's because he seemed kind of laid back, right? He's owned this since 2014. He's like, look, this is a joke. We know they're a real company. Give them 5 years. Let's see what they're going to be able to do. And he's fine holding the investment. I think his average is around $7 or $8 as well, because that's when he bought in a while ago on the private markets. So didn't do the best job selling the stock, but overall still talked about some of the core things that is important for Palantir, which is that Ukraine, the United States, military, army, all of these people are using Palantir in a sophisticated way. So if you went up to them, the CDC, and you're like, hey, is Palantir a real company? Obviously, they would say yes. And they would say yes because they're using Palantir and because the benefits of Palantir in terms of what they need to get done is actually manifesting itself. Now, the thing I wish he talked about outside of just some of the military contracting stuff is where we see real growth, which is in the commercial space. And that is still the question of execution. Can Palantir get, thousands and thousands of companies across the world to be able to use their platforms, use their softwares in a meaningful way? We've seen what they've done with Tyson and Hertz and the Tampa Bay General Hospital and Cardinal Health. Now, can you expand that to hundreds and hundreds of clients every quarter? Because that's really what's going to allow this type of explosive growth. And I wish he talked a little bit more about the Microsoft partnership. Even though the Microsoft partnership is a partnership in the public sector, it's a private partnership that started a couple of months ago with Foundry being enabled on top of Microsoft Azure's App Store. And so they saw that because it's working in the commercial sector, because it actually makes sense, because clients actually want to pay more for Microsoft Compute because they're getting benefits on top of that, which is the Palantir Foundry. That's platform agnostic. It's cloud provider agnostic. What if we brought that to the public sector? What if we brought that to governments? What if we brought that to the DoD, etc.? And so strategic partnerships and go-to-market strategies with vendors like Microsoft, enabling the use cases of Palantir, to me, on a day like this, when someone says it's not a real company, that's when you're like, wait a second, Microsoft's not partnering with a fake company. Microsoft just bought a crap load of ChatGPT, right? They're doing some of the most innovative, revolutionary stuff when it comes to AI. They're not going to partner with a tiny little $14 billion company when they're a $2.8 trillion company for government-related, high-level classified types of data tasks if it's not a real company. And so that's the point I would have made if I was on CNBC, if they ever invite me to come on and talk about Palantir. I mean, that's what I would have said. I mean, like, you don't have a company that's worth 2.8 trillion working with a small company like that. Some other points that he brought up that I think were important was the free cash flow at 500 million, cash on hand 2.6 billion. I mean, these are things that matter, especially now in these macroeconomic times. We don't know if the Fed's going to raise rates. We don't know what's going to go on. We don't know how bad inflation is going to get, even though it looks like it's going down on a downward trend. It might take a long time for the Fed to officially recognize that. So in these hard times, which may be around for another 12 to 18 months, do you have the financials to justify your company being around? And Palantir obviously does. They talked about stock-based compensation as well. These were some of the, and this goes hand in hand with dilution, which is probably some of the other things that Cramer's upset about and considering why they're not a real company. But Roger made a good point. And the point was, look, that was an issue in 2020 when they were coming to market. That's not an issue anymore. Right? That was an issue in 2020. And when I mean it's not an issue anymore, he used the word dissipated. These concerns are going down a lot. I mean, in 2020, they had $1 billion of stock-based comp, right? Like, that has gone down tremendously. I think now it's like 564 million, which is still a lot. But as revenues are growing and stock-based compensation is down 29% year over year, if we can get that down another 30% year over year and another 30% year over year, we're going to have $100-200 million of stock-based compensation in the next couple of years, which, again, you want to get the best talent in the world. And in order for that talent to be motivated to work, they have to get equity in the company, but that equity has to appreciate. And this is what Karp talked about in the Q4 2021 earnings call. When someone asked him about stock-based comp and dilution, he was like, look, we're aligned with shareholders on this. We cannot give employees stock in the company and be like, hey, work for us, believe that Palantir is going to be the best thing in the world, stay motivated, right? And then their stock's in the gutter and they never see any share appreciation, because guess what? They'll just leave. they'll go to a different company that has better, that is maybe less stock-based compensation, but better share appreciation. And so one of the ways you get to share appreciation is you have GAAP profitability, which is another thing Roger mentioned. The way to get GAAP profitability is for you to be lean. You have to be operational. You have to be operational fit. You have to make sure your margins are intact, and you have to grow in a way that allows you to have a full year of GAAP profitability. I don't know if next quarter we're going to be GAAP profitable. I would hope we would be. But for full year 2023, they have guided to be GAAP profitable 2 years ahead of when they said in 2025. And so when you get GAAP profitable and you accelerate revenue growth on top of that, at some level, the market has to recognize that. And at some level, the shares that employees got at 15, $20 in terms of their options for their strike prices, those have to come up so those employees get made whole. And so Alex Karp has been very serious about this. It says like the number one stakeholder of Palantir, which are their employees, need to actually participate in the upside. And the only way to participate in the upside is if the market recognizes that the premium delivered on the stock should be given. The only way the market recognizes that is not only increased revenue growth, but GAAP profitability, because then the market's like, well, you're a profitable company. You're not just losing money hand over fist. They have $500 million in cash flow. They're going to start to get GAAP profitable. If we can really accelerate the operating margins and the growth rate from beyond 20 to 25%, then I think, Palantir has a shot to have a pretty good year. And as he said, the 5-year time horizon is something I'm also giving them as well. I mean, let's give them till 2025 and see what they can get done. They got profitable 2 years in advance. The amount of deals they've announced over the past couple of years have been just astronomically important, especially with everything that's going on in Ukraine. And you don't know what's going to happen geopolitically, especially with China and Taiwan. I don't want anything to happen, but you don't know what could happen. And as a result of you don't know what could happen, where could Palantir software be utilized in a deeper way? My biggest thing, and I wish, again, this is the biggest thing I wanted Roger to talk about, is can they scale in the commercial sector, and highlighting some of the use cases of what they've already been able to do in commercial. When you're saving Tyson Foods $200 million, you should be able to do that for a lot of other companies. When BP buys 1% of you because you're that valuable in their business operations from a data perspective in terms of managing oil and understanding where to drill and all these different things, that's very valuable. Can that scale to many, many, many more companies? Can Karp pull that off? And if he can, I think Palantir is very exciting. And I think that's the bull case. But to say they're not a real company, as Kramer said, is, it's just, it's pretty ridiculous to me. So those are my thoughts. Make sure to subscribe to dailypalantir.com. Free newsletter every single day, dailypalantir.com/subscribe. Thanks so much for being here. I will see you guys in the next one.